we feel very confident about the outlook for emerging markets for the next 5 to 10 years. Of course, the past 5 years hasn't been great for emerging markets, we all know that, but something is changing. First of all, valuation. After 5 years of underperformance, the valuation for emerging market equities, bonds, and especially currencies is becoming really attractive. The second point is the dollar. Whenever the dollar is going down, emerging markets tend to do well.
And we really believe that the dollar would be heading down. Why? Valuation is very high. We think that the dollar is roughly 15 to 20% overvalued. The US economy is starting to underperform, and the Fed at some point will have to cut rates.
And then there is China. China's growth is going to be weaker in the next 5 years. We all know that China is in a secular downtrend. But what is really important for us is that the quality of growth is improving. China's consumption will account for roughly 15 to 20% of global growth. And then you have structural reforms, not only in China, in Indonesia, in India, in Brazil. This is something that is really changing.
So we believe that in the next 5 years, emerging markets would outperform significantly in equities and bonds, and our preference would be for emerging market Asia, where we see the biggest upside potential.
投资一定有风险，基金投资有赚有赔，申购前应详阅公开说明书与投资人须知。